All right, I'm going to go ahead and get started. Thanks everybody for being here today. My name is Geoff Bruskin. I'm the managing partner of White Tiger Connections. White Tiger, we are a consulting firm that specializes in the public accounting industry. We do three primary things for accounting firms. We do mergers and acquisitions, we do recruitment, and we also do consulting. Public accounting, we've been subject matter expertise for about the last 5 years. Spoken to over 3,000 firms in that time, and our optimal demographic in the accounting industry would predominantly work with firms that are between 100,000 in top line revenue and about 15 million in top line revenue. So that's our sweet spot. And several months ago, we started seeing a trend emerging among RIAs, wealth managers in general, broker dealers as well, but I think more commonly in RIAs. A lot of RIAs are very interested in the accounting sector, and I see this for a couple of reasons. One is that wealth managers holistically look to grow their assets under management. And one of the easiest ways to do that is to acquire other RIAs or wealth management firms. And something that we've seen happen really since COVID is that market, the M&A market among wealth managers, has matured. It's not that you can't buy firms in wealth management anymore. It's just that they're much fewer and far between. So wealth managers continue to be very interested in growing their assets under management. And another way that we've seen really emerge, this has happened since the early 2000s, but it's become even a stronger focus now that the M&A market in wealth management has matured, is partnering with CPA firms. And the reason this is so attractive is obvious, right? It's that wealth managers see that an accounting firm has a captive group of clients that when the wealth manager can market to those clients their wealth management services, they can cross-sell very efficiently. And a book of assets under management is very valuable. It's actually far more valuable than an accounting practice is, both from an amount of revenue that it generates for the wealth manager, as well as for the total enterprise value of that practice when it comes time to sell the business. The problem is that partnering with CPA firms is very hard to do. Accountants don't have a lot of peripheral vision or foresight, so accountants don't really think about wealth management as a viable solution for their clients, not when compared to how many accountants are looking to simply exit their companies. And this is largely because number one, there is a massive exodus of baby boomers that is preparing to leave the accounting profession. I have read that as many as 50 to 70% of the CPAs in the public accounting market will be retiring in the next 5 years. That is a monumental shift in the capacity for accountants to serve their clients. Another reason why these partnerships are so difficult to develop is because accounting firms have a net loss of young people that are entering into the profession. So what this has forced, both the combination of older folks exiting the profession and younger folks who are not entering into the profession, is accountants who are already not a very entrepreneurial group of people have become even less able to have the peripheral vision of doing something strategic like partnering with a wealth management firm. So wealth management is not any less interested in getting involved in accounting. So what we are seeing, since this partnership model is so difficult to do, is that RIAs are now acquiring wealth management firms. They're engaging in this M&A activity. But the problem remains the same. After a wealth management firm has bought an accounting firm, you still have to serve those clients. And you're now inheriting all of the same staffing challenges that the accounting firm had in the first place. You have the succession challenge of needing to replace the owner of the CPA firm. And you also have the support challenge of needing able to provide back office and middle office solutions to support whoever that successor is. And all three of those functions, the back office, the middle office, and the front office, there are not enough people to do the work. Period. So this has created a lot of stagnation. RIAs are very hungry, what we see, for a solution to this market, and they have not yet cracked the code on exactly how to do this. We feel that we have cracked this code, and we are looking to beta test our solution with a handful of RIAs, and that's the purpose of the webinar today, is explain our ecosystem, our model to you. So we have three solutions. The first solution is we source accounting firms for RIAs to buy. That's number one. The second option is RIAs sponsor our internal private equity vehicle to buy the accounting firm ourselves, and we will give exclusive rights to the RIA who sponsored the acquisition to cross-market their services into our clients. That's option number two. Option number three is we will build a CPA and accounting firm inside of the RIA, inside of your firm to better serve your clients. And our model is we either do option one or we do option two and we do option three. So it's either one and three or two and three. And just to go over what those are again, the first option is we find the accounting firm for you to buy. Option two is you sponsor our buying the accounting firm, and then we give you the rights to exclusively market to the accounting firm's clients that you've sponsored the acquisition of for us to handle. And that third option, which is a necessary evil, is to allow us to build capacity to serve the accounting firm's clients inside of your firm. So let's go over all three of those options in detail. Chances are, if you are an RIA, a wealth manager that has been interested in buying accounting firms anecdotally, it's not necessarily that you have not found any accounting firms that are for sale. It's just that you have not been successful in buying them yet, or maybe you've been successful, but you recognize that this is a very viable model and you are looking to accelerate and to acquire more firms in this regard. What I know is that all of the RIAs and wealth managers that I've spoken to, their concern is the same. After we buy these firms, how are we going to solve for talent? How are we going to serve the clients? And that's really where this third option comes into place. We are talent acquisition experts, in addition to being M&A experts within the accounting sphere. And we know how to recruit the professionals and retain the professionals that can cost effectively serve the accounting firm's clients. As a brief aside, I have even spoken to RIAs who will run the accounting firm at a loss because the wealth management business is so profitable for them. The problem with that is that if you are not effectively able to serve the accounting firm's clients, the accounting firm's clients that you've now acquired are going to leave. And you're not going to be able to cross-sell your wealth management services, which are so lucrative. So if you can't solve for the talent problem, this is the same talent problem that all of these accounting firms are already struggling with, you're not going to be able to have success in your accounting firm M&A structure. And one of the reasons why I see wealth management firms not buying accounting firms is because you really need to put a significant amount of cash down on a practice in order to close on an accounting firm. Now, it's beautiful because unlike RIAs that sell for somewhere in the neighborhood of 3 times gross revenue, accounting firms usually sell for more like 1 to 1.25 times gross revenue. So it's a very cheap acquisition, and it's a cheap group of captive clients for you to cross market your wealth management services to, as long as you have that function for handling talent acquisition, so those clients don't leave because they are really at the accounting firm for accounting services, right? Not for wealth management services. That's just whipped cream and the cherry on top. Now, we are able to do the talent acquisition so that it doesn't, so that you guys are able to successfully serve the clients, you RIAs, which means that it is a more intelligent investment decision for you to make to deploy 50 to 70% of the cash that is required to buy the accounting firm. A lot of the RIAs that I talk to say, well, Geoff, because it's so hard for us to solve talent and because the accounting firm can't solve for talent, we only really want to put 10 or 20 or 25% down on the practice. The problem with that is the accounting firm owner, it's almost more advantageous for them not to sell at all if you're only going to put that amount of cash down. Because when you're talking a 1 to 1.25 times gross revenue model, right, which is what the fair market valuation for most of these practices are, why would they bother selling? If they just work an extra year, they're going to make far more than they would make if they sold you the practice. Now, the problem is the accounting firm recognizes that you're going to have the same problem they're having, which is if you don't have a talent acquisition strategy for accounting in your roll-up strategy as you acquire these firms, Mr. or Mrs. RIA, you are not going to be able to get the owner excited about you're going to put 10, 20, 25, 30% cash down. But if you're willing to show that your model, you have enough confidence that you're going to put 50 to 70% of cash into their hand, right? They're still incentivized to help you handle the transition, to help you retain their clients, to help you cross-sell your wealth management services. They're incentivized because they have 50 to 30% of their remaining equity in their practice, which they have yet to get paid out for. So they're still incentivized, but you are demonstrating the confidence that's required. You're now going to be successful in buying these firms that we can bring to you. This is option one. And we'll get into how we solve for talent when I go into that option three bit. So this is option one. Option two, let's say that you don't want to handle the stress of running the accounting firm because really it is difficult. It's a lot of stress for not a lot of money. The accounting firm model, you can make profitability. I see accounting firms that run at 30, 40, 50% profitability. It is possible to do, but it takes a lot of work. I don't want to insult any RIAs that are on the call at all, but I believe it is harder to run an accounting firm than it is to run a wealth management firm. I've never run either of them, but just from what I see in the market, given the talent environment more than anything else, you have to retain people who are numbers people, who are not necessarily the best in the client relationship standpoint, and yet who are looking for real career growth. And let's be honest, folks, there's a lot of a lack of work ethic that's in the environment broadly today. And you take that and you layer on top of it a hard talent market. Maybe you don't want the stress. Maybe all you want to do is you want to, just like in the partnership model, you want to have a captive group of clients that you can exclusively cross-sell your wealth management services to. This is our option two. So our option two is 50 to 70% of cash. You fund our acquiring the accounting firm. We will handle 100% of the burden for retaining those clients, for recruiting the staff, for handling the OpEx, and you get to exclusively market to our group of clients. This is option two. It's a private equity model where you're the investor. And what we know is that when a accounting firm's group of clients, whether we're talking low value and higher volume clients, or we're talking high net worth individuals, when you successfully have a few years of exclusive rights to cross-sell your services, you're going to have significant cash flow added to your bottom line because wealth management is a very profitable business. And number two, your enterprise value is going to skyrocket because that is a perfectly activated group of clients for you to cross-sell your wealth management services to. They already are talking to their accountant for financial reasons. They trust their accountant. The accountant knows everything about their financial life, and the accountant is the first person who these clients go to. Again, whether we're talking lower income America, middle income America, or high net worth America, the accountant is the first one they go to when they're looking for a referral, when they have a life event, newborn baby, marriage, a trust or an estate, a death, a will. The accountant is the person. If they don't know someone, they go to the accountant. And what's more, if they're not happy with one of their service providers, they go to the accountant for a recommendation because they know that accountants live in an ecosystem of other professional services providers who can support them and their families. So this second model, maybe you don't want the stress. We will handle all the stress for you. And for the cost of the accounting firm, you will have a captive group that you can sell your very lucrative services to. This is model two. Option three, and the reason why option three is so important is because even if you choose that option two, where we're going to handle all of it for you, your clients still need accounting services. And we want to build the capacity to serve your clients with accounting services so that even if you choose option two, you still have a fully integrated structure so that you can offer your wealth management clients that come through your door an accounting solution, tax accounting services, payroll, fractional CFO, financial coaching, asset protection, and things like trust and estate creation and maintenance. All of these complementary services can be handled under one roof, your roof. And what's more, when clients knock on your door, but they are not yet in need of wealth management services or insurance services or employee benefit plan services or any of the ecosystem of services that you provide, Mr. and Mrs. RIA, you can cross-sell the tax and the accounting and the other services that through us you also provide. That's going to make your existing clients stickier because they have an exhaustive solution to serve all of their personal needs. And it's going to make the clients who you encounter, the prospects who don't yet need what you do, it's still going to capture them in the ecosystem where ultimately, when they need someone who provides the services, the very lucrative services that you provide, they're already going to be captive and they're going to be included in that captive audience that we're handling on your behalf, where you can exclusively market your services to them. I think option one, it's obvious why, if you are doing this M&A, if you are owning the asset, which is the accounting firm, you're going to need that additional capacity to serve them, because all of the accounting firms that you're looking at, again, they're struggling with talent. And do you really want the burden of having to find, recruit, retain, run those practices? You can own the asset, but we can help you run the firm. We know how to do this very efficiently. As I said, we've spoken to over 3,000 firms in the 5 years we've been in business. We know a lot about this space, and we can do the talent acquisition, the retention, the HR. We know all of the areas that are minefields and how to step very gingerly through them, because this is really a people business, folks. Let's be totally honest. You have to know the numbers, and numbers are very attractive when it's done correctly. But the hardest part about this is people. All right, doesn't seem like we have any questions. I hope that means I answered all of them. Please reach out if you have any questions that arise, or if you'd like to learn more. My email is geoff@whitetigerconnections.com. Our website is whitetigerconnections.com. And you can also find me on LinkedIn, Geoff Bruskin, GeoffBruskin. Thanks a lot. Have a great day.